The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 8th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to check out the markets and see what the bulls and the bears, what the buyers and the sellers are tossing to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now is just fine, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 74 points, 24,283 is the print, about 0.3% to the downside. S&P is off 9. NASDAQ 100 down 28, 0.4% to the downside. Russell's up just slightly, about 2 points. Semis are up just slightly, about 2 points. The trannies are up 0.9%. They're up 89 points out there. Other than that, we've got the spot volatility. Everything else is to the downside, the exception being the spot volatility index. It's up 39 pennies, no big deal. That's 2 6/10% to the upside, but gold's back 2, silver's off a nickel, light sweet crude back $2, natural gas off 2 pennies, bonds are down a few ticks out here. So we've got things to talk about. Of course, individual stock-wise, we've got Zebra Technology. That's up $14, 10% to the upside. Trex Company's up $13 or nearly 13%. Martin Marietta up 4% or $8. Arista Networks up 7. Gartner up 6. To the downside, Booking Holdings up $30. Nervco, I take that back. Nevro, misread it. Nevro Corp down $14 or 50%. Amazon off $13. That's less than 1%. Thor Industries down 8. That's 7%. And Veritiv, one of those, VRTV is the ticker symbol. That's down 19% or 7 buckaroonies. We did have a question that came in, so let's get to the first question. This was from Pat. And Pat was asking me, shoot, where did I put all that stuff? Here we go. Pat was asking, he had read an article, and Pat could be a woman's name. So Pat was asking, in an article that was read yesterday in the Wall Street Journal, it was saying that the sell in May cycle, what Pat's referring to, is in essence, I forget the name of the chap that put this work together. Used to be able to pull those off the top of my head, but he did the work and basically broke the year, the calendar year, not the calendar year. We'll call it the calendar year. He broke it. He broke the year, 12-month period, into 2 cycles that he called favorable and unfavorable. In essence, that's where the sell in May really sort of comes from, because the favorable or the unfavorable season, what I should say, lasts from May until October. And then the favorable, as you can see, would be November through the end of April out there. So I can't say a calendar year, but I can say a 12-month period of time. And, Pat, yes, we have entered in that cycle, that unfavorable seasonal cycle. And one of the things that Pat read in the article, I didn't read the article. He sent it to me, but I don't electronically subscribe to the Wall Street Journal, so I couldn't complete the reading of it, but I didn't really need to. But the article apparently concluded that the sell in May really only worked during midterm elections out there, and Pat wanted to know what my thoughts were. So, Pat, I have a chart out here. I'm surprised that I didn't put it right up on my, here we go, right up on the beginning of my, in essence, slideshow from the current slide out here. So, Pat, here's the first thing. We're going to go pick this apart for you. And this is taking a look at the Dow, by the way, for the last 21 cycles out here. So this goes back to 1934, and then every 4 years after that, we've got the midterm elections out here. Now, the way that the Dow typically performs on average over those 21 periods is it does have a move to the downside. Not really substantially different, quite frankly, than the overall seasonal cycle. Yeah. So in this case here, in 2018, the midterm cycle high should have been on April the 19th for the Dow. There was a high on April 19th. It's a high that has been taken out thus far. So I would say, Pat, you can't rule it out. And this would move down into October. I believe that that was also a part of the article out there, that this cycle would move down into October. But, Pat, you and I, we don't just take things at carte blanche. At least I don't. And so let me do this here. And we really need to do a bit more work, right? I mean, we just should be doing if trading and investing were that easy, you don't need me, that's for sure, out here. And you could just simply sell in May and come back in October, right? Wrong. I don't think that would be a good move. Let's take a look at all of those individual cycles. I'm going to do this a way that it's not like you're going to be here forever, but I'm going to do this by taking a look at all of those cycles out here. Actually, it says 22 on my screen out here. I believe that one of those was the one of those 22. It probably was 22 was the actual average of all the prior cycles out there. But you can see that here's the deal. You'll see each of these, if you look at the left-hand side chart of my screen, each of these starts in essence right around the beginning of May. Just to make sure I got everything, that might have been like the end of April, just to make my work a little bit easier. And you can see if we were to draw a line. So let's just call it around the 17,000 level. And you'll see there are plenty of patterns that are above. These are all the midterm cycles. These are all, each and every midterm out here. And yes, it looks a little bit scatterbrained, but the reality is it is scatterbrained. There is not anything out here that shows, when you take a look at each of these midterm cycles, Pat, that you begin in May and the markets just simply move down into October. We would see a much different chart. If we took a look at this and we broke it down by taking a look at 10-year periods of, we just split these cycles, not 10-year, but we just split these cycles in half because that was 22 cycles that we looked at. If we try to break those down between the most recent, for 1930, let's just go from 34 to 74 out here, you're going to also see that is scatterbrained. So no, the sell in May. If we look at just the last 10 cycles that are out here, which should still be at about that 70. No, is there a predominant rule of sell in May even during a midterm that says that you should buy into that hocus pocus dominocus? Pat, no. It's all about pattern recognition. It's all about a set of other tools out there. The guy, the gal who wrote that article in the Wall Street Journal, you tell him, give me a call. Steve Rhodes with TFNN. I'll set him straight. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. One of our wingman, David White, our favorite polar bear, he tells us that the sell in May saying dates back to Old England, when the stockbrokers would go on summer vacation in May and not return until summer. It said the original saying was sell in May and go away, do not return until St. Ledger's Day out there, supposedly because of the heat in the summertime. I don't know about you. I've spent a bit of time in London town in England, and it is one of the few places in the world where on one day you can experience all 4 seasons out there. For those of you that have been over there and spent a lot of time, you know what I'm talking about. You can easily get summer and then fall and spring and winter all within that same 24-hour period of time. The only other place I know like that really is Hawaii, and which would be in the Big Island. When I was there last in February, it snowed. It was a major rainstorm, which was a big snowstorm. Turned out to be, you could see snow on the top of Mount Mauna Kea, where we've got the big volcano that's blown off. Maunalani had snow, and then you could see it over on the dormant volcano in Haleakala in Maui, which was pretty cool to stand where it was, quite frankly, summer, hot, in your bathing suit, and be able to have a clear day and look up and see the snow there. Of course, on that same day, actually it was the day before, we were touring, taking a helicopter tour over Kilauea, and watching the quite smaller lava flow that they have there. Lava is always flowing there. Now it's flowing in a big way. So let's go back to Pat's question. We don't want to just end there. So, look, Pat, it's really all about patterns. Here's the sell in May. These arrows just represent the most recent 4 or 5, 1, 2, 3, 4, 5 periods, the most recent 5 periods out there. And if you just go back to those, say, for example, the most recent one in 2014, the time to have really sold would have been right around September the 15th. That's when there was a high that was formed inside of the S&P. That's the S&P we're looking at. And there was a low that came in right on October 13th. So with regard to that cycle, with regard to back in 2010, you could have sold right out of the gate, but it would not have been October. That would have been the time to have come back into the market. It would have been June, right around June 21st, 22nd, 28th, right around this, a weekly chart that we're looking at out here. With regard to the cycle prior to that, would have been 2006. You could have sold right out of the gate, but if you had come back in October, you wouldn't have made any money. The time to have come back would have been July the 3rd, July the 4th, when the market reopened. And in the case of 2002, well, you wanted to come back around the end of September, so that one seems like that would have worked okay. The sell in May cycle 1998, well, that was really the sell in July. Just didn't rhyme very well. July the 6th, to be exact out here. So again, when we just take a look at it like this, first of all, you can use May-ish as something to look at and October-ish as a time frame to look at. And you do want to look at that October-ish, or you want to look at patterns. It's really going to be all about patterns inside of the marketplace. Now, there's another pattern that you and I, we don't talk about enough out here, and really we should, because when we take a look at patterns, somehow we get so tunnel vision, so myopic that we think we're the only ones taking a look at in this case here, the S&P 500, as if we, you and me, us, are the only ones trading the S&P 500. That we have to jump to the conclusion that everybody over in Old England town isn't trading it, or everybody over in Paris isn't trading it, or everyone over in Tokyo isn't trading it, or everyone over in just go around the world, and that is a fallacy. And what I can assure you is that when they are making trading decisions, whether it's in gold or it's in oil or it's the S&P or it's their indices out here, they're thinking in terms of their currency. It's no different than when they go to dinner. They're not worried about how much did this piece of beef cost me in U.S. dollars when you're sitting there in yen. So where's the S&P trading in terms of, let's call it the major currencies? Yeah, we're going to separate, in essence, the basket of currencies, or three of those currencies that make up the large U.S. dollar index, and try to figure that out. Well, the left-hand panel of this chart out here, Pat, is the S&P priced in U.S. dollars. We know it's trading at 26.64. But if you and I are sitting over in one of the countries that uses the euro, let's just simply, where do you want to go? Hey, just any country over there that uses euros and you're a stock trader, you're saying, that S&P actually broke out above a prior swing point. You see, the prior swing point that we're dealing with here inside of the S&P in dollars is April the 18th. That same April the 18th, priced in euros, the S&P has broken out. If you are a momentum trader and you are trading in terms of euros, you are already in a long position just simply because of a breakout method, and there's an A to B equals CD to the upside in terms of euros. In terms of yen, you got there yesterday. Yesterday, you closed above that same swing point out here, if we use day-for-day analysis. So you've got the S&P actually breaking out. Now, has it broken out and gotten past its all-time highs? No. But it's looking pretty good. If you take a look at the S&P in pounds, my goodness, this is a nice break. The S&P in pounds is headed up to the 2015 area. I don't mean the calendar year. I mean the price of 2015. Right now it's at 1966 as we speak. Look, all of these currencies, with regard to the S&P price in dollars, top within a few days of each other. And so it does give you reason to pause. But right now what you are seeing, Pat, is they are not saying sell in May in Euro land, in pound land, in yen land. They're saying buy. And that buy, for the most part, was in April. So the question that you and I that are posed with is, who's the lead dog out here? Or is the S&P priced in U.S. dollars going to follow along and break out above the 27, 20-ish area? I don't have the exact price, but whatever the high was in April 18th, 2016. And that is something to think about. One last thing to think about, if we take a look at what the S&P 500 here has done so far as we speak, just trading in a nice consolidation similar to what it did in 2015, we can see those are the yellow rectangular boxes on my screen. If we just look at the body of the candle, which is truly the essence of price, Pat, what you and I are going to see is that this 2630 level, and this is on a monthly chart out here, really good support for the S&P 500. The S&P 500 is trading in a range. We just take a look at the bodies of the candle. These are the horizontal trading ranges between 2630 and 2849. One thing I will assure you is that if the S&P 500 or the Dow closes above the January high, do not think short. Hopefully you'll be in for the next run, because inside the S&P, that gets you up to 3067. Are we going to see that during 2018? Yeah, it's a real possibility. But what you and I have to look for are patterns. And that's what you and I trade. We trade those A to B equals CD patterns. Let's go take a look at light sweet crude when we come back from this break on the long term. It's completing a 1-to-1 A to B equals CD, but has it broken through support? That's really the question out there. And we're going to go figure that out when we come back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We'll go take a look at Light Sweet Crude in just a moment. First, we did have a request that came in prior to that to take a look at the small caps out here, to take a look at the Russell 2000, the equity futures contract, and that's for Ruby inside the Tigers Den. Now, Ruby is long and has a stop below 1573. So what I don't know, Ruby, is a short-term trade, a long-term trade? Why the 1573? But here's what you can focus on inside the Russell 2000. First level is going to be 1589, 1588, 1586. Yeah, 1586 to 1589. The top of the 30-minute profile, 1586.80. The top of the 120-minute profile, 1586.50. The top of the 240, 1588. The top of the daily, 1589. So here's what you know, Ruby, and again, I don't know what your time frame is for trading and so forth, but you're up against a fairly solid level of resistance. I mean, on all of these time frames, the way these profiles work is they identify where the snipers are, so to speak, in this case here, the sellers, and where the buyers are. And each of these boxes and time frames help us to understand whether they have a bullish bias or a bearish bias out here. And on the 240-minute chart, it's a bullish bias structure. And so below 1574, 73, below 1575, and you're at 1573, says, okay, if that profile gives way, I'm out. You want a tight stop. If you want a tight stop, get out of the trade right now. Then you're in the money, because you're really up against some pretty significant resistance out here. You're 1582. We know that 1589 is a significant resistance zone, right? You know, whether it's 1586 to 1589. No, look, I have a slight delay on this, so it's not really at 1582. It's a 10-minute delay on my screen out here. But now your reward risk, again, it sounds like a short-term type of thought process in trade, which is cool. But now I question the reward risk. If price closes over 1588, you're more of a longer-term time frame horizon out here, then what I would say, hey, you get about 1588 and you're on to 1605. So maybe the better trade is wait for resistance to fail. You know, maybe something along those lines. So it's the Russell 2000 equity futures contract. If I could find anything else for you, let me do this here. Let me go over to one of my other screens, see if there's any other patterns that you've got to really focus on or pay attention to. Again, looking at your 1580, what was the price point? Like 1573 level out here. So, you know, Ruby, we like to pay attention now. The market sings in the key of G. Stevie Wonder, that's what it did at 3 o'clock yesterday. Nice old bearish engulfing candle. Just suggest to you again that that is a significant level of resistance. I'm not saying that it won't get taken out here, but look, you asked for the numbers. I gave you the numbers, and hopefully that assists you with what your next move is here. I don't know what I would do based on this short term. I probably would have gotten out, you know, as price was coming in at 1586 level, and that was at about 10 o'clock this morning, knowing that that was a real significant resistance zone out there. And then you could have just gone ahead and taken your profits and gotten back in if, in fact, that resistance level failed. So hopefully that helps assist you with what you are looking at out there. So now I'm going to switch over. I want to take a look at light sweet crude. Let's take a look at what it is doing or appears to be doing. I just have to try to figure out where did I put that chart. Well, here's one. I've got a chart right here that you and I can go take a look at. We should go look at the profiles as well. Now, I mentioned that light sweet crude has completed an A to B equals CD pattern. Let me see if I can actually find a cleaner chart. And if I can't find a cleaner chart, I can find it. I can do anything I want. That is the beauty. I just have to say, excuse me for one moment while I go clean up the chart just a tad out here. Let me see if that helps. Yeah, that helps. So now let me just get over to the light sweet crude. Now, it's a continuous contract that you and I are going to look at. So it's going to be slightly different if you start to really analyze all the history out here, but it will give you at least the feel for what it is that we're taking a look at, or at least what I'm looking at. Now, this is a daily time frame. I'm going to switch it off the daily time frame out here, because if there's going to be a change in trend, you really want to see it occur on the weekly time frame out here. Now, what you and I know is that one of the Rhodes momentum indicator tools out here is price moving higher doing less relative energy, which is exactly what light sweet crude has going on as we speak right now. However, that little move to the downside that we saw out here in the body of the candle is truly the essence of price, and where it closes at the end of the trading session is what's really important, because the wicks, or the upper and lower shadows of a candle, they're nothing more than the screaming memes. They're nothing more than the emotional pattern of of what went on out there. Once the emotions run dry, then you get back to the actual body of the candle session. And so far, what light sweet crude has done is simply tested Stevie's red line. And as long as price remains above Stevie's red line on a weekly basis, all you saw took place today was a lot of noise. That's why it makes it slightly difficult to take a look at Ruby's trade that she's in. I don't have all the details because price is right now in the mid-stroke out here. And is the reward worth the risk? She might be in at such a low price that the answer there is yes. That's why I don't have enough information. But should you go short light sweet crude, thinking that what the administration is going to do is rip up the Iran deal and then think that the light sweet crude is going to behave in a certain way, or that he's not and it's going to behave in a certain way? The way that you look, circumstances happen to all of us. They happen to a chart. I promise you that years from now, I will be able to look at this week, where we're in right now, the week of May 11th out here, and I will not know what exactly took place. I doubt that I will remember what took place. But if you and I are looking at this chart, we would say, well, from a weekly perspective, hey, price did not close below Stevie's red line. We didn't get a bearish reversal candle. There was no signal at all in light sweet crude to go ahead and take a short trade out here. Now, I'm looking at somebody that's trying to identify where there's going to be maybe an intermediate term change in trend. It is not there just yet. Now, we can also go take a look at light sweet crude and try to figure out what the market profile data provides to us. So let's go do that. And we're going to find that information. We're going to find that information where? Where? I know where. I'm just trying to find it. I guess it's a little bit further in. Oh, I'll be a son of a gun. Where did I put that chart? TAS long term. Where is the long term? ES trading. Normally, I'm like right on this stuff, and it seems to have, there we go. It's right there in front of me. So now we've got the light sweet crude. We've got the 60, the 5-hour chart. We've got daily, and we've got the weekly time frame. You're going to see that all price did from a daily perspective was come down and tag the point of control. By the way, the point of control, the center line of the box, that's where both buyers and sellers believe there's fair value. In this case here, 67.57 is where price stopped at. Right now, it's trading above the top of its box, 68.76. So profiles are saying, even from a daily perspective, don't attempt the short position in light sweet crude. Now, intraday traders may be a different story. But right now, it says you've got to wait. And you've got a date. Come 2 to 3 o'clock with David White, and then 3 to 4 with Tom O'Brien. You'll have plenty of information by then, but I'll be right back in just a few.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Les writes in. Les, thanks for writing in. Les writes in, Cy Harding's newsletter did the seasonal cycle. And, you're absolutely right, Les. What Cy did was he took the work. The guy that I was thinking was Harding. Cy Harding. So, yeah, that's no. So it was not. It was Hirsch. Yale Hirsch was the guy's name. That's where Cy took his information from. But Yale must have taken it from, as David White put in the Tiger's Den for us, from good old London town out there. But in the case of, unless I mentioned Cy Harding, and he had a fairly simple strategy, which was, and I'm just reading from his website, if this is correct, if you can believe what you read on the internet, and I don't know if you can, but this says the buy signal the sell signal, sell on April 20th. So what's interesting is the April 19th timeframe that you and I looked at, which was really during the midterm election cycle. I don't know that this is dealing with that. I think this is just the basic cycle. He says, sell on April 20th if the MACD is bearish. Well, let's take a look at the Dow. Let's go to April 20th. This year, I think April 20th is right here. And the question is, was the MACD bearish? And the answer, the way I would interpret it, the answer would be no. It was below zero. Okay, that's that price oscillator. Now, again, he's probably using 12 and 26. So, versus what I'm using. Well, let's change it. What the heck? Let's live. Let's really live on the edge out here. Let's go take a look at it. Give me a second here to just simply adjust the screen so I can do this, which is a beautiful thing because I can do anything. So we got to change this from 19. Let's put 26. Let's go to the oscillator and change line. That's got to change. So 12, if we're going to do it the way that he probably did it out here. And then we'll give you what his signal likely is. Okay, so everything should be adjusted on my screen. So now we've got in essence, what is the MACD line on the very bottom panel of my screen. We're going to go to the 20th out here. It's a daily chart. And on the 20th, you had price come down and test Stevie's red line right at 0. So that would be like, that's like neutral. That's like, is this bearish or is this not bearish out here? I mean, it is right at the number. So let's go on to see what else. Wait for a bearish MACD signal if the MACD is not bearish on April 20th. So when would it have gotten bearish out here? It would have gotten bearish probably realistically on the trading day of April 24th. And if you went short on April 24th, right now you'd be feeling a bit of pain out there. Is the MACD below the 0 line? Yes. Is price now above Stevie's red line out there, the oscillator and change line? Yes. Says more counter trend rally. He had the exact same thing, and the date that he used was October the 16th if it was a bullish signal out there. So let's just go to last October 16th out here and just see what the signal would have been. Of course, would have missed a lot of a move, but if we just simply use October 16th as the time frame out here, October 17th, here's October 16th, and at that stage, you've got the price oscillator above 0. It's bullish, period. And so, you know, that might have worked for you. Okay, enough with the sell. No, I can't say enough because somebody else sent something in. And if you spend time to actually go ahead and write to me, then I am going to go ahead and at least read it. So this is from Sean. Sean says, during May, farmers had to borrow funds to plant crops, equipment, etc. Capital found its way onto farms in the form of the crop and thus was not used as much in the stock market. As a result, stocks would not perform as well. And the fall after the harvest, crops would be sold, loans would be returned, the new crop would bring about, and at least if it was a good crop, new wealth to be invested and money inside of the market. So thank you for that as well. Out here, let me just make sure we've covered it. We have covered the bases. So, and again, I thank each of you out there for first just listening and then taking some time to maybe just simply help out. Now, we had a request out here to take a look at Roku, this one coming from Tamar. So let's go change this out. Now that I screwed up this chart, I can't give Tamar, we're going to have to change to a different chart to give him my total review of Roku. So give me a moment just to do that. But we do have these charts out here that you and I can take a look at. And so let's see, what does Tamar need? Can you review Roku? I bought it I bought the 3250 puts between the high and low of yesterday. I wanted to sell in the morning, but I gapped up. Not sure if I should get out now or hold. You didn't tell me what time frame it was that you were dealing with here. So I don't know if we're talking about next week or if we're talking about next month or a couple months from now. So here's what I'm going to do for you to the best of my ability. And we're going to take a look at Roku, and I'm just going to give you a feel for what the stock charts suggest that it is doing for us. So the first thing that we're taking a look at tomorrow on our screen here is we have the daily, the weekly, and the monthly time frame. The monthly time frame is not going to be helpful to you or I with regard to its market profiles. And those are the blue horizontal lines on our screen. So Roku, from a monthly perspective out here, weekly perspective, probably found a bottom at 3063. That's what the profile is telling us. Now, you'll see that this profile is equally distributed, so neither bulls nor bears have the upper hand here. If on a weekly basis price were to close below 3063, then you're going to go test the most recent low of 29 bucks and maybe even lower. And when I say maybe even lower, it brings you back to the all-time lows out here in the 18 buckaroonie level. Now, in the case of the daily time frame chart, what this communicates to us as we look at market profiles here, you can see that its current market profile does have a bullish structure, and this says that price ought to at least get to 34.81. Doesn't tell me whether price is going to get above 34.81 or not, but you know, it may in fact go ahead and hit that level. If we take a look at Stevie's other charts out here, the white background charts, what we're going to see is this actually gave you a nice bottoming signal. That is Roku, and I'm referring to. That was back here on April the 5th. The same way that it made its high out here back on December the 20th, in essence, is similar in the way that it made its bottom out here. And so that says, okay, you've got some pretty strong support. Now, hasn't really taken off. We haven't seen any wide price spread, accelerated volume, anything like that to the upside out here. But it does look to me, well, clearly, or maybe not clearly, to me it's clear that Roku is telling you, or buyers are telling you, that this thing is trying to find a bottom. And it really did that on the trading day of April the 4th. It would have to, and if you take a look at what Roku is doing, this thing really, a sign of strength, went ahead and took place in November of 2017, began on the 8th, accelerated on the 9th, accelerated on the 10th, accelerated on the 13th. Pretty big volume out there, and that's where price is coming back into. So tomorrow, this is what I see going on inside of Roku. I don't see any huge upside potential, but I don't see any huge downside potential in this equity as well. I don't know when their earnings come out, but that's what I see when I take a look at Roku. So thanks for taking the time to write in. Now I just want to make sure that I've gotten everybody's requests. Of course, we're going to be going to a break in about 10 seconds out here. So I think that I have. Right now, we've got the Dow trading down 41 points. S&P is off 5. Russell's up 3 points right now. So, Ruby, it's going to give you, it looks like, another chance maybe to take your profits up at that resistance level, or even tighten up the stop even more. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we began the session taking a look at the old sell in May, and what that did was that forced me, in order to answer the question, to take things a little bit deeper in the study. So we looked at each of the individual time periods to see, how important was that. And we were looking at sell in May, by the way, just simply during the midterm election years. That's all that we were looking at out there, were the midterm election year cycles. What then led us to say, come on, this is a one-world market. Because it's a one-world market, we can't just think of being traders in U.S. dollars. We've got to think like the other guy. If you're going to win the Stanley Cup, right, Wayne Gretzky's great statement was that he was great because he skated to where the puck was going to be. You've got to figure out, where the markets are going to be. That's old pattern recognition. That's the A to B equals CD tool. That's levels of resistance. That's taking a look at things priced in other currencies. And right now, Goldilocks, priced in euros, is right up against its resistance level. The number, Stevie's magic number, is 1107.20. And even though it says 10 on here, I know it's 1107. Take it back. It's 1107.10. It's 1107.10. We are trading at 1106.50, priced in euros as we speak. If we see, and I don't know how gold is going to react, I don't know anything's going to react after the administration comes out with their Iran stuff out here. I don't have to guess. We just have to go ahead and take a look and see how things react. But if gold priced in euros cracks above 1107.10, and you were a trader in euros, what do you think you're going to do? Are you going to sell euros? Are you going to say, you know what? Gold is breaking out in terms of euros. Something to think about. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next. Because it's Terrific Tuesday, that just means we've got the lineup of the century. Tom O'Brien from 3 to 5. Andy Heck to take it on home from 5 to 6. And the rest of us will be back with you tomorrow on Wonderful Wednesday. Thanks again. Have a great day. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.